ICT has a lot of believers. It also has a lot of people who think it's astrology for candlesticks. To find out who is right, I did 2 backtests on ICT strategy. One fully coded, rules only, no judgment involved, and one running through a built AI engine, an AI trader running on its own methodology. I'm calling him Michael, with a full backtesting harness equipped with every tool in his playbook. I've never been a fan of ICT, and I don't think I have watched a full video start to finish. Guy talks 40 minutes for the thing that he can explain only in 4 sentences. Of course, it's not an argument, it's just me being annoyed. The actual argument is during my 20 years of experience, I've tested and backtested thousands of strategies, and 90% of them don't have any edge. And it's even worse when we're talking about gurus. Besides, a lot of things that he sold as ICT isn't new. For example, break of a structure and change of character are straight out of Wyckoff and Dow theories. Change of character is literally Wyckoff's own term, almost word for word. The liquidity and smart money framing is Wyckoff composite man. Even the optimal trade entry zone is just another version of Fibonacci golden zone. Of course, that's not important. It just makes it, I discovered it myself, for the thing that people were using decades ago, a bit strange. So skeptical of the man, skeptical of the branding, but here's what actually kept me from having a real opinion on ICT. Parts of ICT is discretionary. They need human judgment, and you can't mechanically backtest judgment, which means for years there were no honest way to backtest such strategies. AI changed it. I built an AI version of Michael Huddleston, the guy who created ICT, and ran him through the real market data, bar by bar. Not to prove he's right, not to prove he's wrong, just to find out. Before anything else, let me touch on the mechanical and AI backtesting and see which one we should use in general. Normally, when you backtest a strategy, you code it. An expert advisor, a Python script, you write the rules, the computer applies them to history exactly the same way every time. Same data, same code, same results, forever. It's still the most reliable method that exists. If the code is right, the backtest is right. Here's the catch. Some strategies aren't rules underneath at all. They are judgment. Take for example, break of high and low, straight out of Dow theory. In ICT borrows it wholesale. Sounds trivial. Try coding it perfectly and you'll find out it isn't. There are already indicators that attempt it, and they still miss breaks a discretionary trader catches instantly. So why can't a person catches that instantly but an indicator can't? Because a trader isn't running a formula in their head. We use Gestalt perception, the brain's ability to group individual pieces into one coherent picture and filter out noises without consciously calculating anything. You don't count candles to know a structure shifted. You just see it. Whether that's a real edge or just a very convincing illusion your brain generates after the fact is exactly the kind of question a mechanical backtest can never answer for you. That's the gap AI can actually close. LLMs aren't calculators. They're pattern recognition engines, trained on how a structure relates to a structure, which puts them a lot closer to how a human reads a chart than an EA ever gets. Of course closer, not equal to. Well, mechanical backtesting always wins whenever a strategy can be coded. The AI backtesting is for the strategy that supposedly can't be, which includes ICT. Let me be clear about what I don't mean by AI backtesting here. I don't mean opening ChatGPT and type it, backtest this strategy for me. That's not a backtest. The AI in that case doesn't have access to the price feed, and there is a high chance that it is trained on the exact chart. A real AI backtesting needs infrastructure around the model, the same way a real mechanical backtesting needs a backtesting engine. It needs live price feed the model can actually see, guardrails so the model can't quietly cheat by remembering the future. And the grading system, it has zero control on it, because a model that grades his own homework is not what we want here. Since I didn't find anything out there that does exactly what I want, I built the whole thing myself. I built an AI trader modeled on Michael's published ICT methodology, and I call him Michael. Though that's not the claim that the Michael I invented trade exactly like the real Michael, because the real Michael's results are contested, and there is no way to verify it. So I'm not gonna touch that part. What I can test here is the methodology, the concepts, the hierarchy, the discipline rules. That part is falsifiable. Anyway, this is how it's built to think in order on every chart. 1. What is the higher time frame bias? 2. Is price in premium or discount of the deal in range? 3. Has the structure actually shifted in his favor? 4. Which array is the entry? Fair value gap, order block, breaker, OTE? And 5. Is it even the right time? Kill zone, micro window? If the AI sees none of them, it says flat. No trade. That no trade part is important more than it sounds like, because one of the weaknesses of the AI backtesting is when you ask them to find setups on a strategy and you give them a chart, they find something. Doesn't matter if there is a setup or not, because finding patterns is what they built to do that. A model that sees trades in every bar is not disciplined. It's just agreeable. So here's a number instead of me just asserting he's disciplined. Across the test window, Michael was asked to vote 641 times. It said flat or no trade on the overwhelming majority of them. Only 47 of those charts ever cleared his bar for an actual trade. That's a more than 90% refusal rate, which shows our AI only generates trade when there is a real ICT setup. And here's the stat I find most interesting in the whole run. Ask him why he passed. And one reason dominates by a wide margin. A structure hadn't actually shifted yet. That's the blocker in well over half of every vote. Confirmed as an actual green light only about one time in 20. If there is one rule ICT traders repeat more than any other, it's this one. And it's the rule he broke the least. 600 plus votes in a row, no fatigue. No getting sloppy on trade 400 like a person would. Here's the part that's actually new. And the reason I built this instead of just running a prompt 50 times. Most strategy tests hand you one number, win rate or expectancy. That tells you whether it worked. It tells you nothing about why. So every trade Michael calls has to show its work, not a paragraph of confident sounding prose. A structured breakdown of exactly which concepts he used. Fair value gap, order block, liquidity sweep, a structure shift, kill zone, full discretion in the analysis, zero discretion in what gets reported afterward. So instead of ICT wins X% of the time, a number that tells you nothing useful, I can tell you which specific piece of ICT's vocabulary is actually carrying the result, and which pieces are just along for the ride. I'll show you that breakdown at the end. I didn't just test the discretionary version. I also built a second, fully mechanical version of the exact same playbook. Same concepts, same market, with every one of those 5 judgment calls frozen into crude dumb fixed rules instead. Same ICT vocabulary, zero judgment. Run both on real data. Now we have a trader and his rules only twin. But that's not the whole story. Both versions, mechanical and discretionary, only mean anything if the backtest itself is reliable. Mechanical backtests have known ways of lying to you. Overfitting rules to the past, execution modeling that ignores real spread and slippage, using data that wouldn't have existed yet at that point in time, and some others. So I made sure this one follows best practice. AI backtests have their own ways of lying to you too, and they're worse, because they're much less obvious and much easier to weigh with confidence. Number 1. The model might already know the answer. Show an AI a real, dated labeled chart from last year, and it's not analyzing anymore. It's remembering. So before Michael ever sees a chart, the prices and dates get scrambled. He can't recognize the period. Time of day stays real, because kill zones depend on it. Number 2. No peeking. Every chart Michael judges is built exactly as a live desk would have seen it at that timestamp. Only candles that had actually closed. Nothing from the future leaking backward. Number 3. He doesn't grade his own homework. Michael only ever calls a trade. He never decides whether it won. A separate process walks the real candles forward and calls the outcome. And any ambiguous case counts as a loss. Number 4. The cheap version doesn't work. And I checked. Same persona, same rules, on a budget model, 500 votes, 0 trades. It never once confirmed the structure shift, only ever ruled it out. Swap in a real frontier model, same setup, and it starts trading immediately. Reading the structure of a raw chart is genuinely hard. Cheap models just can't do it. That's the honestly checklist. One more thing worth flagging though, the discretionary AI backtesting is slow and it isn't free. The mechanical bot walked a full year of candles in about a minute. The AI version took roughly 2 days of real compute to get through 2 months of charts. That gap is why the AI run covers weeks, not years. Not because I stopped when the number looked good. The mechanical version, the rules-only bot, walked closer to 25,000 50-minute candles across a full year of Euro USD. It closed 125 trades. Win rate 29.6%. Profit factor 0.81, meaning every dollar it lost only bought back about 81 cents, down roughly 15 hours. On a standard account, that's thousands of dollars gone. You can use this calculator to figure that out. The discretionary version, Michael, the same playbook, Judgment Restored, worked about 4,000 candles across 2 months of the same pair. 47 trades taken out of 641 votes. Win rate 40.4%. It's still under half if you're only looking at that one number, but his average winner ran close to 3 times the size of his average loser. Profit factor 1.99. Net result for those 2 months, up roughly 27.5 hours. Same market, same candle feed, same ICT concepts on both sides. The one variable that changed was whether a judgment call sat between the pattern and the trigger. And that one variable was the difference between a strategy that bleed out over a year and one that came out ahead in 2 months. Now, if we take the same 2-month window in the mechanical backtest instead of the full year, the rule-only bot closed 22 trades. Win rate 22.7%. Net results down about 4 hours. Even matched to the same 2 months, the rules-only bot still finishes red. Same direction as the full year, just a smaller number. Rules-only ICT lost money over a representative 12 months. What a 2 months comparison tells you is the sign, not the size. One version went red, one went green. Same rules of the game, same market. Last but not least, out of the whole ICT vocabulary, fair value gap, order block, liquidity sweep, a structure shift, kill zones, only one concept's confidence interval actually clears zero once you run real statistics on it. Higher time frame bias, the simplest, least glamorous rule in the entire playbook. Not the FVG, not the sweep. Just know which way you're allowing to trade before you look for a reason. This is important because the sample size is still small. Simply put, if the whole confidence interval is above zero, we're 90% confident the setup has a real edge. If the interval dips below zero, we don't have enough evidence yet. We need more trades before we can say whether the edge is real. I wrote all this up properly. Every trade, every concept, the full methodology, open source, as a full study, linked below, if you want to check my work. So, rules lost, judgment won, in this market, over this one window. That's real evidence. Discretion can add something that their scripts can't. Of course, it's not proof that the ICT has an edge, and 47 times is not a reliable sample, but the discretion result was promising enough that I don't want to leave it here on backtest. I want to test it live. That's why I built a Telegram channel, and Michael is going to send signals every day there. Same personnel, same rules, nothing changed in comparison with backtest. It's free, linked in the description. So see you in the next video.